Half an hour away from the reopen in Hong Kong, mainland Chinese market still shut for the holiday. You're watching the China Show. I'm Yvonne Man with David Ingles.
Good morning. Let's get to your top stories today. AI in play. Stocks across the region are on the up. Global equities hit a fresh high here with traders shrugging off the U.S. government shutdown again. Hong
Kong markets set to reopen from that holiday as investors assess early data on travel and consumption during China's Golden Week.
Also ahead on shows here, President Trump says he will be pressing China to restart soybean purchases when he meets President Xi Jinping later this month.
And crypto in focus at Token 2049 in Singapore. Catch our exclusive with venture capital firm Dragonfly.
Oh, it's going to be fun out there today if you're a bull, if you're long these markets, if you're long AI in particular. A lot of themes we'll get to in a moment. The Samsung SK Hynix story, the TSMC rally. Just now, JPMorgan upgrading their price target to $240 for Alibaba. More on that in a moment. 45% was the delta from the previous price target. As you can see, a rally is taking place across the board. We've flipped into the green as far as S&P futures are concerned. We talked about this chip story, next board coming up. And the reason why you're looking at that big move on the Kospi index is because of what we're seeing here as far as this is concerned. Supply, as far as the OpenAI story is concerned, TSMC is coming online. We're up a further 3%. In the Taiwan session today. The dollar story certainly helps because it is on the weaker side of things. In fact, it has been weaker for a fifth straight day. Dollar index coming up very, very shortly. You have dollar yen, euro dollar, and your 10-year yield on the back of, I guess, conversations around what data are we going to get this week. So we have initial jobless claims that's scheduled for Thursday. Of course, if you have a shutdown, that's not going to come out. Jobs report comes out on Friday. Flip the page, please, and have a look at where we are as far as some of the commodity plays are concerned. So everything from iron ore and copper, which had been rallying. Gold futures are pulling back a little bit, as with by double the delta here in terms of silver futures there. So certainly copper-related plays are going to be very much in focus on the reopen in Hong Kong. Some of the gold mining stocks, of course. Zijin Gold, of course, second day of trading. Today we'll see what that looks like following that blockbuster debut. Very quickly, A50 futures coming online. I would imagine very much green on your screens coming up very, very shortly there. Among the many things, of course, will be going into the open today. There's a chance we might test and we might actually close above, by the way, some of the highs that we hit back in mid-September. We'll get to those levels in a moment. But yeah, looks like we're set for a rally here today.
Yeah, chips, everything AI related, that certainly is now our top story here in just the last couple of minutes. We're recalibrating our rundowns as we speak, guys. But here's what the agenda is looking like here today. Of course, focusing on this Hong Kong reopen. So the tech space could be that big driver here today. Golden Week holiday data, we're starting to get little inklings of it. And it seems to be overall pretty optimistic at one point here. But Macau, certainly we're watching that very closely, those numbers that we got yesterday as well. Gold, casinos, copper, that's very much in focus. And we did get some sales numbers when it comes to some of the EV sectors, right? So BYD, that was a bit of a disappointment. So we'll watch that here this morning. We have August retail sales coming through in Hong Kong and still watching, of course, the highs when it comes to overnight HIBOR.
5% on the last fixing. Oof. Yeah, we'll get that today. Okay, let's have a look at how we are likely set to trade as we reopen here in Hong Kong. If any of the proxies overnight are any indication, and some of the news flow after those markets close. 2-day move on KWEB, 2-day move on FXI. On your screens right now, A50 futures up a fifth of 1%. Mark Cranfield is with us right now out of Singapore to help us understand this approach to the open. Mark, suffice to say, we'll likely see a gap open? Question mark as we go into the Hong Kong reopen today, Mark.
Yeah, it'd be surprising if we didn't open pretty strongly today. I mean, everything supports Hong Kong markets, really. You've had a very nice tailwind from the US. Yields coming down in America, which is good for everybody, of course. Dollar's softer, as you were mentioning earlier. Everything is in place here, and people are assuming that the US shutdown won't last very long, in which case the equity market in America will look past it. They would be concerned if it stretched, say, for a month or so, something like that. That will impact the earnings season, and then people might be a little bit more concerned. But then when you talk about the AI story, that seems to supersede everything. It doesn't really matter what's going on with the lack of data or any noise from the sidelines. As long as people see a big boost for AI, then they're pretty happy. And when you get a 45% upgrade in the Alibaba stock price, that takes care of everything, really. even this BYD story overnight, their sales are down, but BYD's been underperforming the Hong Kong market so much already, investors won't be too concerned about that. So it will be pretty surprising if we don't get a decent day today in Hong Kong, and it will be able to keep up with the pace that we've seen around the world.
This whole Samsung SK Hynix deal with OpenAI, Mark, I mean, it seems like it's a big deal, given the fact that these two companies are basically tech giants that have a huge weighting on the Kospi. Did it just give a bit more sort of leg room for this rally to continue in Korea?
I mean, the optics are fantastic. Everybody loves anything that boosts the AI story is good for sentiment. If you look at the Korean won is relatively cheap on a global basis. That helps as well for foreign investors get a bit of a lift from the currency. Certainly, it will help the Korean stock market to perform well. And when you think of the Korean stock market may have been looking a little bit stretched, but when you compare it to what's going on in America, it really doesn't look quite so bad. So once again, on a relative basis, most of Asia doesn't look too bad compared to the gangbusters moves we're seeing in the United States. So all in all, the markets can accommodate a little bit more upside in there. There's a bit of a circular argument to the AI space, which some people are showing concern about, some of the funding, the money, which is being raised by companies like Oracle, going back into the AI space as well, just to build more data centers. That's more of a long-term issue. At some stage, people will focus on that, but that's probably something for next year. In the meantime, what they're concerned about is the flood of money which is going in, creating opportunities. We may well see that reflected. People will be looking at NVIDIA when we get to the quarterly earnings season, which begins pretty soon. NVIDIA will once again be the star in that context. What their outlook is in terms of demand for AI products will be very important, and that will feed back into the Asian AI story as well. For now, nobody wants to rock the boat. They want to run this theme as much as possible, and it could well last through to the end of the year, particularly as the backdrop is that the Federal Reserve probably has room to lower interest rates a couple more times.
Mark, what's the risks? I mean, okay, there we go. I've forgotten how to spell risk now. Remind us what to be paying attention to here.
Obviously, the outlier really is on the geopolitical scene here. This nice, comfortable backdrop, one of the key things, of course, has been the standoff between the United States and China over trade. Ever since they called a truce and they started to be nice to one another, going back to after the Liberation Day shock we had to markets, the US and China decided it was much better if they got round the table, started talking and doing these 90-day periods of talking to one another, trying to improve the trade relationship over tariffs. That has been rolling on for some time, and it's a very important backdrop to the whole scenario for helping to keep global markets on an even keel. President Trump and President Xi are likely to meet at the APEC summit. If that goes smoothly, again, that pushes forward the context for good support for the financial markets. If there's a falling out between President Xi and President Trump, that is not priced into markets at all. That would reverse us back to something like we saw in April, and nobody really wants to go there. It's a tail risk for the time being, but as we get close to that APEC meeting, people will probably start to think, what if it doesn't go as smoothly as everybody is anticipating? Because that is probably the biggest risk to financial markets in the near term.
Mark, thank you. Mark Cranfield there, our Bloomberg M-Line strategist, joining us out of Singapore. Some sectors that we're watching ahead of the reopen in Hong Kong as well. We're talking about EVs. We're talking about casinos. Let's start with BYD. The sales for September fell for the first time in over 18 months amid strong domestic competition. Meanwhile, Macau's gaming revenue for the month missed estimates as well as visitor numbers fell. Let's bring in our team. Our China correspondent Min Lo joins us along with our conglomerates, consumer and gaming reporter Shirley Zhao. Min, I'll start with you with BYD. Not a good report card for September.
Yeah, actually, you got to wonder whether this is a turning point for BYD because sales declined by 5.5% on year in September. And as you said, it's the first decline in about 1.5 years. And if you remove the Lunar New Year fluctuations, it's actually the first decline since 2020 when COVID disrupted supply chains. And it shows you the intense competition is there despite the anti-involution campaign in place. And it's particularly stark when you compare to some of BYD's competitors in the sector, right? You look at XPeng, we're looking at over 90% gain on year in September. Leapmotor as well, over 90%, and Geely, 35% gain. And that's a company that is restructuring now in order to better compete with BYD. It is in the process of withdrawing the Zeekr brand from the New York Stock Exchange. And so we'll see. If you look at the year-to-date stock performance so far, BYD has certainly been trailing behind some of its other peers.
So what's next then? How do we throw the story forward?
So for this company, analysts are saying that it will have to focus on its strengths, which is to focus on the overseas market to drive volume, because domestically, the price pressures are still there. Despite the anti-involution campaign, many companies are just outright ignoring the government directive. They are still either offering discounts or keeping prices flat, so the margins are not really there. So the capex spending for BYD will likely focus on expanding its overseas factories to maintain that economy of scale to keep up that margin, especially for the overseas market.
Right. Shirley, can I bring you in here just to talk about the Macau data and the conversations we've had there? So the monthly intake, which is somewhat backward-looking, of course, missing estimates. Let's start there. What was behind that weakness?
So September, we've seen a series of bad weather events, including the super typhoon Ragasa, which wreaked havoc in both Macau and Hong Kong. And Macau raised its top tropical storm signal, and all the casinos shut for more than one day. And a lot of flights and trains were canceled, both in Hong Kong and in Macau. And that seriously affected tourism in the city. And that has had an impact on Macau's September gaming performance. And September is traditionally quite slow for Macau as well because it follows directly the summer holiday where a lot of families visited Macau. But in September, as kids go back to school, the family tourists are gone. So that's why September's gaming performance in Macau is a bit slow.
What's the outlook for October? Obviously, we have the Golden Week holiday. What are analysts saying now?
Yes, so there are a couple of catalysts remaining in Macau in October, including the Golden Week. And we are expected to see a tourism boom in Macau during this week-long holiday. And also, Macau government and Macau casinos have been focusing on rolling out more concerts and major events to drive mass-market tourism. And in October, there are a couple of major events, including the NBA China Games.
Oh, yeah.
Yeah, that's going to happen, later this month. So it remains to be seen whether it will really drive gaming performance in Macau. But analysts are pretty optimistic.
All right. Shirley Zhao, our Bloomberg Conglomerate's consumer and gaming reporter. Also, thanks to Min Lo, our China correspondent, on some things to watch at the Open. And we'll be digging into the Hong Kong reopen with Morgan Stanley later on. Laura Wang joins us to talk a little bit more about the fundamentals of this rally, what she's seeing structurally there, and what's really driving these fund flows into the region.
Yeah, we have lots of questions now for Laura Wang and where we go with this rally. As we go into the reopen today, there's just to also mention, Shirley mentioned this typhoon. There's another typhoon that's on the way. It hits us on the weekend, so we can worry about it in a few days. In the meantime, though, it's looking like a strong open is ahead of us. Alibaba's indicated higher. BYD is indicated lower. The opening about 16 minutes and 30 seconds away. This is the China Show. Right, welcome back. So end of the month, towards the end of the month, of course, there's a big meeting taking place. According to President Trump, they are set to meet with Xi Jinping. Soybeans look set to be very high on that agenda as American farmers are increasingly worried about the lack or absence of orders here out of the Chinese. Their crops will go unpurchased this year without a single trade. With trade, generally speaking, with Beijing. Let's bring in Stephen Engel, our Chief North Asia correspondent, on what the latest here as far as soybeans are concerned.
Soybeans, yeah, that's moving up to the top of the agenda as far as issues that Donald Trump wants to talk to Xi Jinping about, obviously, because China essentially, according to the data we have, has not ordered any soybean cargoes from the United States since the harvest began last month. And that is a big shock to American farmers, which conventional wisdom would say many of them in the Midwest probably voted for Donald Trump. And they are getting increasingly angry. They're worried about stockpiles filling up their silos and prices falling. And prices have been falling. They've had the worst 2-year stretch of prices in soybeans in a decade. And right now, prices are down and demand has flatlined. And that is really concerning these farmers. And so Donald Trump has said it's going to be a major topic of discussion when he meets Xi in about 4 weeks on the sidelines of APEC. And he has said, basically is asserting that China is doing this for negotiating reasons only, not by not buying. It's a negotiating tactic. And why not? China knows that the United States needs China because, again, the soybean crops, traditionally, anywhere between 30 to 60% of American soybean crops are sent to China, depending on the year, depending on the politics. And it was a focal point of the first trade deal that Trump negotiated with China. It fell apart, of course, because of the pandemic and other issues. But you know, we need to look at some charts. Oh, you already brought it up. There's the flat line, the white line. China's not buying. And it's been 4 weeks of the harvest already since the beginning of September. We're 1/5 the way through the harvest, according to the industry groups. And this is expected to be about 117 million metric ton crop this year. And they could be sitting idle. So that's a big problem. Let's bring up a next chart about the sentiment that farmers have right now. It's sinking because of the potential of overflowing storage bins. And then we can bring up the next chart and show the prices, how they've looked over the last couple of years. It's a ski slope downwards.
Yeah. We talk about, soybeans possibly be a negotiating tactic by China.
Yeah.
We've talked about the priorities already leading up to APEC. It seems like it's TikTok, maybe a little bit of Taiwan.
Industrial
maybe
magnets.
Yeah. What does this trade deal potentially look like now between U.S. and China?
If we could still call it a trade deal, actually, or is
we
it a
don't even
broader
know if there's a
conversation?
trade deal. Donald Trump's been a pretty open book in his negotiating tactics. How open has China been in its strategy? Other than you follow the money, you follow the data. China clearly is buying from Argentina. They're buying soybeans from Brazil. They're not buying from the United States at all this year, or this harvest. So, again, you have to kind of I would probably agree with Donald Trump that China is using this as a negotiating tool. Why not?
Yeah.
If they have that leverage, why not? And Republican lawmakers already in the last 24 hours or so, after having a closed-door meeting with the U.S. ambassador to China, David Perdue, got the assessment, I assume, from him that China is not going to be buying anytime soon. Why? Because that meeting between Xi and Trump is not going to happen for another 4 weeks. So another month of the harvest is going to go untouched by China. So again, it's becoming a bit dicey time for farmers. That's why Trump, again, mentioned today that we might use some of that revenue that they're getting from tariffs and send that in the form of aid to farmers. But again, farmers, from the farmers Bloomberg News has talked to, they don't want handouts. They want a trade deal with China. That's sustainable. And they know that their crops will be sent. If they get cash handouts, they still have that excess inventory.
Yeah, they want future cash flows, predictable cash flows, not a one-time offer.
Yeah.
Steve, fantastic. Stephen Engel there, Chief North Asia correspondent there.
In other news that we're tracking out of the U.S., the White House budget director is said to be planning to swiftly dismiss federal workers amid the U.S. government shutdown. Sources say House lawmakers have been told that some agencies will terminate workers within 1 or 2 days, although it's unclear which positions or agencies would be affected. It's a sign that Republicans will employ hardball tactics to pressure Democrats to cave and end the shutdown. The U.S. Supreme Court has refused to allow President Trump to immediately fire Fed Governor Lisa Cook while she sues to keep her job. The decision deals a setback to Trump's efforts to exert more control over the central bank. The order means Cook can remain in her position at least until the justices rule after hearing arguments in the case scheduled for January.
Right. Who would have thought 27,000 could be in play? We're just about 80 points short of that based on the pre-markets right now. We're looking at shares of Alibaba following that upgrade coming through out of JPMorgan. 45% upgrade to the share price to $240, Hong Kong dollars a pop. Baidu's coming up on your screens very shortly. This is an extremely short list of the many themes and sectors and factors we're tracking going into the reopen of Hong Kong markets today. Just under 9 minutes away. Plenty more ahead. A preview, by the way, of that trading session is just ahead. This is the China Show. Good morning.
All right. Brace yourself, right? It's going to be a pretty decent rally when it comes to the tech space here today. Alibaba is already up 1.5% here. This is on the back of possibly this JPMorgan upgrade on the price target by 45%. They're now talking about year-end target for 2026 at 240 for the Hong Kong listed share, maintaining that overweight here. Really talking about, they said, cloud synergies, they say, and really becoming a tier one asset in China internet. That's the shift in the narrative when it comes to that whole Alibaba story. So that's the call from Alex Yao and his team there. So that's one to watch here. Baidu certainly had a big one overnight as well. We're watching, of course, other sectors. The EV space certainly is interesting given what we heard from some of these September monthly sales numbers as well. BYD was a bit of a disappointment there, but there you go. Unchanged when it comes to BYD. The rest of the sector, though, still looking pretty good and risk on, right? Look at NIO, look at Great Wall Motor here right now. Macau casinos is also one to watch. We talked about the miss when it comes to game revenue. Could be just kind of a post-summer season lull, maybe.
September is a seasonally quiet month between school and, of course, the Golden Week, which we're not looking forward to currently.
The prospects have been good. Look. I mean, the market has been actually gaining. I mean, the industry because of what could happen from Golden Week, right? There's a lot of optimism around that.
In fact, when you look at some of the close overnight, so, you look at Las Vegas Sands, you look at Wynn Resorts as a proxy to what perhaps we'll see today, they don't see incredibly bothered at all with the data that missed estimates there. Yeah.
Zijin Gold, of course, we're coming back from that Hong Kong holiday, so we'll see how another day of trade looks like there. And there you go. Still looking good. After its IPO, 126 right now for the price of Zijin Gold. Jiangxi Copper, though, is going the opposite direction here right now. But certainly that is one to watch here. We'll see a CATL. That's a good one here as well. Just given what we've been seeing, all things lithium and reopening that mine opening. That certainly is one thing to watching here today, Dave.
Yeah, that was the watch that we had from early September. We were looking at that, of course, I think it was third or fourth week in September. And certainly the lithium conversation has moved on from that point in time. It's hard to believe we're already fourth quarter of 2020. What year is it? 2025. Okay. And we will be getting, of course, the first session of the quarter out in Hang Seng Index. And who would have thought we'd be at 27,000 at this point in time? But yet here we are within striking distance of that specific level. Again, 10,000, nice round numbers. We're very close to that on the Hang Seng China Index as well. No fix today. It's a reminder that Hong Kong reopens, but mainland markets remain shut for a few more days, so we can have the conversation next week. Just very briefly, at about these levels, so I think it was very recently, a chart's coming up shortly, we were above 27,000, but we closed below that. The reason I bring that up is if you draw that line and you look at that gap around summer of 2021, if I'm racking my brain, the news flows around that, whether that was common prosperity, conversations around the education sector, how far we've come back, and we're testing that gap lower. Something to watch moving forward. The Open is next. You're watching The China Show. Welcome back. You're watching The China Show. Mainland markets remain shut. Hong Kong reopens in about 42 seconds. Initial pricing is a strong one going into the Open today. Even stronger, perhaps, on the back of that sort of last minute, 40 minutes back note coming out of JPMorgan and that upgrade to Alibaba price target, 45%, $240 now is the price target for the next 12 months or so. That's really lifting that, among many things that we're tracking here today, Yvonne.
I mean, it's interesting, right? Even with mainland markets shut, we still see so much momentum in this Hong Kong rally, right? Who needs these southbound flows?
Yeah.
We'll see, right?
What shut down?
Yeah. You take a look at what's going on, right? So you tell about all the news that we're talking about, whether it's a Samsung and SK Hynix deal with OpenAI. That certainly was a big sort of trigger here this morning for Korea to really stand out. Then you have, when it comes to that price target for Alibaba from JPMorgan, 45% upgrade to the price target for 2026. That's massive, really. We'll talk about that in just a bit. But in terms of the Hong Kong Open, here you go, right? So we're up about a fifth of 1% for the Hang Seng. HS Tech seems to be seeing some decent gains here at the open, and certainly we're watching very closely Alibaba. There you go, 1.5% pop there. We're at $180 for the stock. So JPMorgan basically saying it's really the improved outlook when it comes to revenue that really is leading them to behind this upgrade, and really the fact that they're saying 240 now for the year-end target for 2026, right? So there's that, because basically the narrative behind this company has really changed from being a domestic e-commerce market share loser to now a tier one asset when it comes to China tech. So it's basically spearheaded now to be that whole AI play. There you go. That's why we're seeing continued upside here for that stock. Baidu certainly is one of those also when it comes to shifting the narrative, right? It used to be kind of behind the pack when it comes to AI. And there you go now. We are seeing Baidu up 2% once more. Meituan Xiaomi doing also decently well. Tencent also doing pretty good. So for the most part, we are seeing a broad-based rally when it comes to the tech space here. So TSMC certainly is a big one there, and also a potential catalyst for North Asia markets after we saw upgrade from Morgan Stanley yesterday for that stock as well. You take a look at how, some sectors that might be a little bit on the weaker side. It's always been the whole BYD story, which, hasn't really quite kind of derailed this rally just so much, right? Take a look at the stock. We're down only about 0.5% after some of those disappointing numbers coming through when it comes to September monthly sales. It looked a bit better for the rest of the pack, though. Look at NIO. Look at Great Wall Motor, still doing pretty well. NIO up some 3% here as well. We talked about Macau casinos. Looks like investors are still also willing to brush off the weak sort of September data. It is usually a slow time, really, for Macau, but October is Golden Week, right? And we're talking about an 8-day holiday this time around when you include the Mid-Autumn Festival, and people are quite optimistic. But there you go. Right now, after that pre-market boost, we're seeing actually a bit of downside. So maybe there is a little bit more to digest when it comes to this casino revenue numbers here. But still seeing gains of 6%, but did miss estimates. Gold miners, that certainly is to watch after that Zijin Gold listing, and we certainly saw that bumper first day. And there you go. We continue to punch and extend this rally further for Zijin Gold. We're up some 9.5% here as well. So also maybe a bit of a catch-up given what we saw with the gold price yesterday, rallying to records as well. So the miners continue to do well. And it's been really interesting, right? When we talk about the amount of share sales that we're seeing among these gold miners, we talked that with Sibylla Gross yesterday. It really has changed and given more, I guess, of more choice in this market when it comes to investors, and really changing the whole landscape when it comes to the gold space and miners in general. Copper also has been doing quite well as well. Take a look at what it comes to chip plays, right? That's still the name of the game in the spotlight here today. We talked about Samsung, SK Hynix, 11% gains for SK Hynix here on the back of this deal with Sam Altman and OpenAI.
I'm out.
So there you go. There continues to be so much optimism when it comes to this whole AI trade. You're seeing it across the region here, Tokyo Electron. Even the Japanese players, everyone seems to be rallying around this big deal here, Dave.
Yeah, initial agreements to supply chips to the Stargate project, among the many things. So Korea has done well, despite the fact that Samsung hasn't done as well as SK Hynix.
Yes.
And now you have, of course, the other one that's in play. Okay, so that's one story. Yvonne talked about the TSMC story, right? And overnight, this is what we saw, right? Massive move up in ADRs of TSMC. And you compare what we're doing there. So I think it's $1.5 trillion now as far as the market cap on the U.S. listing is concerned. The premium now over the Taiwan listing, and I think it's reflective of, well, for one, I wouldn't call it laziness to have the required documents to buy shares in Taiwan. But if there's a listing in the U.S., that's where all the U.S. money likely will go. And that's driven up the premium to now, as you can see, well above what we're used to historical-wise. That's now north of 30% as far as the premium is concerned. We're now looking at, maybe it's slightly lower now because of the pop that we're seeing right now in TSMC. So the AI play is at play all around across the world. Mag 7, Korea, Japan, Taiwan, even here in Hong Kong, and Greater China, of course, with the Alibaba story taking place. Laura Wang is with us here on set, Chief China Equity Strategist at Morgan Stanley. I don't know where to start. Fourth quarter's here. Best performing market over the last 12 months, as you guys point out. What's the outlook now for the next 12 months? What do we need to watch out for this to continue?
We're still relatively optimistic about the outlook of China equity market. I think a lot of investors are still starting to debate about the sustainability of the bull market because they consider this is mainly driven by liquidity increase, right? So people call this a liquidity bull. But I think in our previous conversations, I've already pointed out that the earnings, the most essential part of the equity market, the fundamentals have already been stabilizing for the last 3 quarters. For example, MSCI China's quarterly earnings already met consensus expectations starting from 2024 fourth quarter, and that's been lasting through the first half of this year. So I think there is a very significant fundamental improvement element in this market rally that investors are not fully appreciating. And this is why investors are still debating. But we see the sustainability of the fundamental improvement as pretty decent, because if you look at earnings revision breadth, which is a very important metric that measures the upward revisions of consensus estimates versus the number of downward revisions estimates. In fact, for MSCI China, this metric has turned positive in August. So basically making China the second market in the world that actually entered the positive territory after the United States. So I think, with that, I'm not too worried about the fundamental improvement. And then on the liquidity side, we know that the Fed rate cut cycle had already officially kicked off. And with China being one of the cheapest market in the global environment, and with the improvement on the fundamental side, we think this ample liquidity that's going to support overall emerging market will actually benefit China on a relatively more basis. So I'm still very optimistic from here.
How should we look at tech? I mean, in terms of when you mentioned about the sustainability of earnings growth, are we seeing that in the tech sector now? And, in terms of the pockets of where you're seeing that, can you highlight some sectors that actually are seeing that visibility?
That's a very important and good question, because the equity market in China, a lot of people are saying that why is it being divergent away from the macro, because we're still seeing some lackluster macro prints, right? But I think you raised a very important point, because the equity market is now composed very predominantly by a number of sectors, and information technology sector and the internet sector. Those are the 2 sectors that are very correlated with the tech and with the AI theme at the moment. And both of these sectors, we're seeing upward earnings revisions at this moment and going into 2026. And a couple of other sectors are also contributing significantly to the earnings growth for the Hong Kong market and for MSCI China, for example, financials, as well as biotech in the pharma sector. And those are also trending up at the moment.
So as far as sector leadership in the market, can I expect that to remain the same case, the sectors you mentioned? What changes, if any, are you expecting in the coming months?
I think the major sectors will actually remain the same. It's going to be the financial sectors, which is banks plus insurance plus brokers. Okay. And then the internet sector, which is media and entertainment plus e-commerce. And then the information technology sector, which is semi plus tech hardware and plus a little bit of software. And then I think the rest of the crowd, biotech and pharma, actually are leading the rest of the crowd in terms of earnings growth contribution. And then we see some latecomers, for example, materials, they are revising up in terms of earnings growth because of the anti-involution positive effect.
Is the AI trade in any way getting crowded? I mean, we had a survey that we looked at some money managers out there just saying they're not expecting that much gains moving forward from here. Even next year is quite modest as well, because they think maybe the AI trade's gone a little bit too far, and we're not quite sure in terms of the policy side of things as well as we get closer to that 5-year plan and the like. So, why are some people still quite hesitant to continue to chase this rally?
I think this comes down to individual stocks that you have in your portfolio. If you look at the large cap internet companies that are transforming themselves into the AI leaders, and compare them to the US peers in the market, in terms of total market cap, in terms of free flow market cap, in terms of valuation, they are very much far behind. I'm not saying they should be entirely comparable in the total size and global market share, but I think the upward potential is still there. But of course, when it comes to some smaller players in the market who's focused on very niche individual sort of categories, then some of the valuations can be a little bit stretched. So I think you need to pick the right names with solid earnings delivery trajectory and also with upward potential market share gain outlook.
What about other, I wouldn't say just consumer sectors, because some of the sectors you mentioned are consumer facing, but what about others like EVs, for example, beverages, your day-to-day economics.
You're seeing the most price wars.
We're seeing the most price wars. I mean, CSI 300 consumer staples, I think, has been down this year so far. So how do I look at that cohort of the equity market?
Yes, we actually have been recommending investors to underweight on consumer staples particularly, and for the same reason on property as a sector as well, because we do have a relatively cautious view still on the overall macro growth. For example, for the second half of this year, we are expecting the GDP growth to slow down to around only 4.5% or even lower. So some of the sectors that are highly correlated with the overall macro picture, we are advising investors to stay away from. Consumer staples, for example, is one of those categories, and we're seeing quite significant downward revisions of the earnings estimates for that sector. For example, the first half of this year, disposable income growth is not particularly encouraging, and also we have a lot of restrictions on alcohol consumption, and that's a very important component of the consumer staples sector. So we're advising investors to stay away.
Laura, we'll have more from Laura Wang there, Chief China Equity Strategist at Morgan Stanley. Coming up, as we talk about consumption, obviously we're focusing on the Golden Week holiday and how really it could spur spending. We're starting to get some prelim data. Estimated 336 million trips were made just on the first day of the holiday. You can see from that video. Gives me anxiety, Dave. I don't know about you.
Yeah. What airport or a train station is this?
It doesn't matter. I don't think it matters. Details next. This is Bloomberg. All right, we're starting to get an early picture of travel and consumption trends during China's Golden Week. State media is reporting some positive numbers so far, with broadcaster CCTV saying cross-regional trips on the holiday's first day rose 1.7% compared to the previous year. The 8-day holiday is expected to spur more spending and potentially really revive sentiment when it comes to consumer stocks. Let's bring in our Bloomberg Intelligence senior consumer and tech analyst, Catherine Lim. She joins us now. Catherine, good to see you. First day seems to be so far so good. What are you anticipating for the rest of the next 7 days or so?
Right. Well, definitely, I'm hoping to actually see the pickup in momentum. A few things really that has actually come through, on top of what we have seen earlier, numbers that I've seen from Trip.com about, bookings up like, 45% year-on-year basis. But more importantly, I think just as we step into the holiday itself, I've actually seen, the government announcing the final disbursement of the special bond funds to actually help stimulate consumption, which is all good. And then there is now an open applications for city governments to apply for subsidies to again stimulate consumption, whether it's in a form of vouchers, etc. So hopefully all of these comes through and materialize into actual spending as we go through the rest of the holidays.
Okay, so how do you think the numbers will look at the end of the holidays? So it's one day. Clearly, we can extrapolate some trends here. Any specific things you'll be watching, Catherine?
Yeah, million-dollar questions. And again, this is a dual holiday, period whereby we're talking about Mid-Autumn Festival, which is the traditional festival for family and friends to actually gather. And that's actually going to take place later this part of the week and into early next week itself. So I think that's where you're going to actually see, that concentration of that spending. Fingers crossed on that, that's going to contribute again to better September retail sales numbers versus, the quite dismal August numbers that we have seen. And more importantly, October, let's not forget that, we're going to kick off the Singles Day shopping festival very soon. And we're essentially talking about the first of these promotions and perks coming 7th to or 8th of October next week.
Oh, yeah, I almost forgot that's coming up. Okay, thank you so much for the reminder, Catherine Lim, Singles Day, Bloomberg Intelligence there in Singapore. And a reminder really of, in my head, of the double holidays. I was actually stuffing my face with mooncakes while hearing the fireworks outside, which underscores both holidays. As I went to bed, of course, I missed the fireworks because we are early sleepers here on Bloomberg Television in the Asia Pacific. Still with us here on set is Laura Wang, Chief China Equity Strategist at Morgan Stanley. What I'm curious to hear from you is how foreign investors' attitudes have changed. Investment committees, are they now open to more exposure to China? And are you seeing differences between where you go and how that sort of story is playing out?
We're seeing a rising level of interest from all over the world, and especially from the U.S. investors. This is not to say that investors from other parts of the world are less interested. It's more because that the U.S. investors, for obvious reasons, have been warming up slightly slower versus the rest of the world because they have a such booming domestic market to focus on for most of part of this year, right? Last month, actually, I finished 3 consecutive weeks of global marketing. I visited Singapore, Japan, and then U.S. Actually for 3 weeks in a row, and I was very pleasantly surprised by the interest from all of them, and particularly in the U.S. And we wrote a report about this, and in which I said over 90% of the U.S. investors I met in person actually expressed to me explicitly that they were going to increase their exposure to Chinese equities. And talking about any slight difference among different groups of investors from different parts of the world, I think investors who are physically closer to China, for example, in Singapore and Japan, their questions are a lot more practical in terms of implementation and execution. For example, they ask Hong Kong versus A shares and specific sector interest, etc. When it comes to U.S. investors, I think the questions are a lot more general and broader, and that shows that they're slightly late to the bull market, but they are very, very keen to learn and do their homework, and they are ready to execute and deploy.
Is there a sense that this is more than just sort of tactical sort of trades now that they're willing to deploy, that they're looking at something as a more of a structural re-rating?
There is the element of liquidity that get people really excited, but U.S. investors also told me very explicitly that they are very excited about the tech and innovation R&D capability that has been demonstrated by Chinese companies. And they specifically mentioned that China has established world-level leadership, particularly in humanoids, robotics, and automation, as well as biotech. And they have to invest in China directly if they want to be part of that game.
I think in a couple of weeks we have a Politburo meeting, I think the 15th five-year plan.
Yeah.
So we're potent for potential policy, trade talks coming through.
Yeah.
Are there any market catalysts specifically to watch out for there?
I think the very first one, the immediate one, would be the Golden Week holiday spending data. I think earlier in your program, you already showed a lot of the busy scenes from the train stations and all that. And I think Morgan Stanley's analysts actually have a pretty optimistic view in terms of domestic tourism visits, as well as, for example, Macau gaming occupancy, etc. But right after the Golden Week holiday, we will have that data readily available, and it will be interesting to see whether domestic spending, particularly on the per capita basis during the holiday season, has gone up versus previous years. And then going into the fourth plenary, which will be starting from October 20th, it will be important to watch what the next 5-year growth plan would actually entail. But I don't want investors to build too much expectation into that particular speech or talk, because usually this stays at extremely high level. Usually it's only a document of 10-something pages, and the details will only be released by March next year. So we should be paying attention to it, but I think as long as we hear something being mentioned about social welfare reform and potentially, buying back of property market inventories, and more importantly, execution of the anti-involution, etc., and those would be good enough.
Yes. Those would be good enough. Yeah. Don't anticipate massive.
Don't expect details.
Don't expect details or big announcements and the like. We haven't talked about trade. Do you have any sort of expectations on how this meeting between President Trump and Xi's going to look like?
And what if that goes south?
Wow, that's a big question.
Well, because expectations are quite high ahead of that.
I think so. I mean, this is going to be the very first meeting between the two presidents after President Trump came into the office the second time. So, of course, people are looking forward to it and are expecting what's going to happen, and people are asking questions around it. As far as Morgan Stanley's view is concerned, we are not expecting too much out of that particular meeting, by which I mean we're not expecting massive tariff reduction as the outcome of the meeting. We still expect somewhere around 40 to 50% in aggregate of tariff tariff from the U.S. against Chinese products. And that's something China that's ready to actually accept. But at the same time, we are expecting the U.S.-China relationship to stay at the status quo, for lack of better wording, because we think both nations have found very effective leverage against the other side. From China, it's the rare earth card. From the U.S., is the tech restriction and power. So we rather expect the situation to remain in the current state for the time being.
And that's been enough with the other factors involved to keep the market rising anyway. I think is the point that Laura was making. Yeah. Thank you so much, Laura Wang there, Chief China Equity Strategist at Morgan Stanley. Okay, just a look at some of the benchmarks here to my right. Well, was the Samsung story, and I think now we have a 27,200 handle. If I'm not mistaken, that is now the highest level since 2021. MSCI China is now bumping its head on 91. There we go. Plenty more ahead. This is the China Show.
Some corporate news this morning. China's securities regulator is planning to triple rewards for tips on serious market misconduct, offering up to 1 million yuan or $140,000. A proposal by the CSRC raises a payout for whistleblowers from 1% to 3% of the value of fines and confiscations. The agency says the rule change is in response to market calls for improved oversight of capital markets. Bloomberg has learned that Apple's hit pause on a planned overhaul to its Vision Pro headset. It's said to be redirecting its resources towards developing smart glasses to rival products from Meta. Sources say the tech giant has been preparing a cheaper, lighter variant of its headset for release in 2027.
Yeah, there we go. Fancy goggles. Okay, speaking of tech, Samsung Electronics, SK Hynix, 1111. There we go. Wow, this is crazy. OpenAI, Stargate, supplying chips to that project. More on that in a moment. A lot more on the way here on the China Show.
Blue skies. We're back from a holiday, well rested, I believe. Enjoyed the fireworks last night. And
well, not us.
There you go. But celebrations overall when it comes to what we're seeing in this rally, right? We're coming back from the holiday on a very positive note. We're up 1% here. Talking about, we're getting close to what, 4-year highs for Hang Seng. We're punching now above that 27,000 level. And you got to think, I think you have to thank Samsung and SK Hynix this morning here for what we're seeing in North Asia.
Yeah, I mean, just when you start to think, oh, the AI rally might be losing some momentum, and you get new drivers coming in. So SK Hynix was a relatively old one, and Samsung, of course, coming in. Then TSMC has some new legs out of Morgan Stanley.
Alibaba.
And Alibaba today. And that's basically, what, 3 or 4 of the 5 heaviest weighted stocks on the MSCI Asia Pacific, all guns blazing today. Hang Seng Index is, as Yvonne is pointing out, 27.2 right now. And as we were just pointing out some of the benchmarks on your screens, 91 right now is the level on MSCI China. Who would have thought when we were flirting with the 60s and high 50s that 100 would be within striking distance going into the end of this year? We talked about Baidu and Alibaba and the price change coming through out of JPMorgan and the team there with Alex Yao.
Yeah, it's a big one, right? Because they're talking about basically the outlook when it comes to revenue, the cloud, also synergies as they talk about here. So certainly the market narrative has dramatically shifted from just being an e-commerce market share loser to now one of the #1 trades when it comes to AI and China tech. So there you go. That's really kind of lifting the HS Tech up some 2% here. Let's take a look at how some of these China tech stocks are doing here, because you have Baidu, Alibaba, Tencent, Xiaomi all rallying here as well. Meituan is also doing quite well, right? We had some consumption data, or at least some numbers coming through from the company, and they're talking about some of the most scenic spots in China were basically sold out on the first day already. So Meituan also doing quite well today.
Yeah, but here's some of the scenic spots in Hong Kong, particularly on the west side of Hong Kong Island.
Oh, you mean near your neighborhood?
Yes. You can tell. I don't need data to tell me that that area of Hong Kong is extremely, extremely crowded. But yes, I mean, the fact that we're here looking at many of these stocks, and it's worth pointing out, right, because we were shut yesterday, these are two-day moves on price you're seeing on your screen.
Yeah, I mean, and granted, right now, the numbers that we're seeing are people making those trips, the number of tourists staying in the same city for 7 to 8 days, according to Meituan. They saw a rise of 50% compared to a year ago. And cities like Chengdu, Beijing, Kunming, Xi'an, Chongqing, Guiyang, you name it. But we need to wait for the spending numbers, right? Because we always have to wait to that towards the end of the holiday. But certainly, it's enough for at least Meituan to do quite well here today as well.
Flip the page, please. I think Morgan Stanley, Laura Wang, basically told us, let's wait for the end of 7-8 days.
Yeah.
And then let's see what the per capita spending specifically will look like. And then we can make a judgment on how really good this holiday season was. To the point we were making earlier on, mind the gap on 27,000. We're right at about that level that there was a massive gap lower back in July of 2021. You can look at the news flow back then, but effectively we are testing about those levels at the current levels right now. So we'll see whether this lasts. And yeah, let's see what is top of mind for investors today.
Yeah, let's bring in Winnie Xu, our Asia equities reporter, and she's tracking all this that's going on in Hong Kong here right now. You have a new survey that came out interviewing all these strategists. They're actually thinking that Asia could outperform the U.S. What's driving that?
Yeah, so overall, we have actually seen that outperformance of Asian stocks over U.S. peers so far this year already, and we are headed for the biggest outperformance of Asia over the U.S., the biggest since 2017. So really, this time the narrative this year has been changing. Just now we talked about how, yes, we have the upside when it comes to SK Hynix and Samsung driving that narrative of AI optimism further. And yes, in China, we still also have that AI optimism with Alibaba. So all of this, you know, with the specific examples in Asia and also these central banks poised to ease further because of the Fed, that really is supporting the overall region here.
Tell us about Alibaba and this change coming through out of JPMorgan.
Yeah, it's that big stock that we're watching literally every single day with something coming out, right? And I was just looking at how it has performed so far this week, up some 10% by now, and then this year up 120% or so. And this JPMorgan target price hike is actually coming after Morgan Stanley raised that target price on Monday already, but this time around by 45%. That is a big jump. And as Yvonne just said just now, it's the shift in narrative, right, that we were quote unquote saying that Alibaba is shifting to become that tier 1 asset in China internet from just a domestic e-commerce market share loser. So that is kind of a big change, expecting that they are going to be part of every single AI stage here.
Winnie, fantastic. Thank you so much. Winnie Xu, our Asia Equities Report. You can check out that survey and the story out on the terminal today, really, on how bullish people are on the APAC benchmark relative to U.S. assets. And certainly this helps on your screens, that bullish case for Asia, when you have the likes of Samsung up 5%. SK Hynix is now punching 40,000 won to the upside to 400K for SK, 11% to the upside. So the news flow here is both have forged initial agreements to supply OpenAI Stargate project with chips. It's certainly a move that reinforces their lead in advanced AI memory. For more on this and really what this means for the outlook of these companies, Masahiro Wakasugi, our Bloomberg Intelligence senior tech analyst, joins us to talk us through the analysis piece here. Masahiro, thank you so much for joining us. This sort of collaboration, what does it mean for both these companies?
Yes, the collaboration with OpenAI Stargate program is quite interesting and, of course, positive for the both memory chip suppliers. And according to Samsung's announcement, the overall demand for the memory chips could be 900,000 wafer starts per month. Eventually. So that overall potential demand looks pretty large. So when it comes to Samsung, the DRAM current capacity is around something where around 750 or 700K, maybe 1,000 per wafer, per month. So the number is quite big, and the SK Hynix DRAM capacity is 50,000 wafer starts per month at this point. So 900 potential 900,000 wafer starts per month demand should be pretty big for the DRAM suppliers. So basically, the news should be the good news for the DRAM suppliers, probably including Micron as well.
How does this change the whole competitive landscape now when you look at DRAM or the HBM market now?
Yes, over the past several years, SK Hynix has been made a huge progress and leading the industry, and maybe when it comes to the most advanced HBM chips used for the most advanced NVIDIA GPU, SK Hynix was the major supplier, followed by Micron, and Samsung might be lagging a little behind. But going forward, probably if we think about the overall HBM demand, probably we may need probably 3 major suppliers are supplying the HBM for the AI industry. So in that sense, probably we think that the Samsung has been overhauling that DRAM production and probably catching up with some leaders, including Samsung, SK Hynix and Micron. So in that sense, going forward, we think that there might be some more good progress from Samsung Electronics. But having said that, SK Hynix could keep the leading position for the HBM. So overall, market growth for HBM should be good for the all suppliers.
Masa, thank you. Masahiro Wakasugi there, our Bloomberg Intelligence Senior Technology Analyst joining us out of Tokyo. Coming up, we're heading live to Singapore at Token 2049. Our very own has more on the ground and what's in store.
Well, the vibe is different this time around, Vaughn. We have a zip line just above me, and we have the Pickle Boy place just around the corner as well. The vibe is really vibrant compared to what we had at Milken yesterday, where people were mulling about the future of the global economy. Here, it's all about how digital assets will be the future. We'll be speaking to the biggest names from Ethereum, Circle, and Robinhood for all things digital assets. Keep it here with us. This is Bloomberg.
Right, welcome back. We're looking at markets right now. So, I mean, a couple of things, right? So obviously there's this AI theme that's continuing to lift most, if not all, boats. I think in many ways, the U.S. shutdown has somewhat taken a back seat, although, it's the time of the week when we should be getting economic numbers coming out of the U.S. Yeah. Initial jobless claim should be out today. If the shutdown continues and persists into the weekend, that basically means no jobs report on Friday, and really what the Fed is able to do with all the sort of vacuum of information, Yvonne.
At least now you get the private data, and we had that overnight, and it still suggested that things could look the same when it comes to whether the Fed can actually cut as early as this month again, right? And that's why you saw Treasuries rally overnight as well. So we're only focusing on the private data now.
Yeah,
what's left?
It's all we have. Currently. Let's bring in Chris Weston, head of research at Pepperstone Group. Chris, good morning, and thanks for joining the show, sir. These next 48 hours, I can think of AI as one theme. The absence of data on the macro front, as far as the U.S. is concerned, might be another. How do you think markets trade Thursday and Friday?
Well, I think the services ISM could be quite meaningful. I mean, we sort of put more weight onto it. I know everyone's saying now we're just going to have an increased sensitivity to really anything that can give us foresight and trying to model, anything to do with the labour market, the service, the subcomponents that you get in these various reports. But I think the market's pretty much made up its mind anyway. I mean, I think if you look at US swaps at the moment, they're pricing 100% probability that the Fed have enough data to go with already that they go and cut in the late October meeting. Whilst we're going to get payrolls probably delayed by, it could be up to 2 weeks or so, they're still going to probably get the payrolls number in time of the FOMC meeting in that phase. So yeah, markets at this moment, and that could change radically, but yeah, they're basically saying that they've got enough information that they'll do back-to-back cuts in this situation, and there's a pretty good chance that they're going to go again in December. So, yeah, we are looking, and market participants are a little bit. Well, we lack any kind of patience. We want information right here, right now. So it does muddy the water that we're not going to get the payrolls data and perhaps not the CPI print on the 15th of October. But, these kind of things do reconcile, and they do play out, and we do get there is a natural handbrake in terms of the date that these things can go on to. So I think it's I think we're just on the idea that it's not a great thing to have, but it's soldier on. We continue to buy tech, continue to buy healthcare, continue to buy equity risk, continue to sell volatility on spikes, and expect the Fed to cut in October.
Yeah, and the one thing you've also talked about is how it has been a very low vol sort of environment for much of the last quarter. Is there anything to think that, or any reason to think that that could change for Q4?
Well, I'd like it to. I think a lot of their short-term traders would love to see some ranges coming through, but there are trends. I mean, there's money to be made if you're a trend follower. You can, you've seen healthcare really coming alive. I mean, tech's working well. Nvidia's broken out to new all-time highs. So there are some brilliant trends and amazing trends in this market to go on. But look, I mean, if you have a look at US equity vol, for example, I mean, if you look at 20-day realised vol in the S&P, it's trading at 6% at the moment. So until we see short, 10 and 20-day realised vols starting to turn up, it does feel like the VIX is going to be contained and have a ceiling at 16%. That volatility risk premium is just not going to go any higher. And correlations in markets, correlation in equity, both implied and also realised, are rock bottom levels at the moment. So it doesn't seem at the moment that we're really in the sense that we're going to see a higher vol regime. And of course, buying volatility comes with a cost. If you have a look at the VIX curve, it's very steep at the moment, and that roll down for buying any kind of ETF products, ETP products, or buying the VIX is costly. You have to be really convinced that's going to happen. Look, we've seen a bit of increase in short-term volatility in FX markets. Dollar yen, for example, 1 week vols have pushed up a little bit sharper ahead of the elections and what we're seeing with the shutdown. But I don't think anything, unless we see something dramatic in the bond market, that we're expecting a big increase in volatility. And that just continues to back up this case that equities are a buy on pullbacks, and perhaps there's a little bit of downside coming through in the US dollar. But I'm not in the... I think people will still be looking to line up to sell volatility on any kind of spikes here.
I was going to ask, in fact, Chris, I'm glad you brought up the dollar. I mean, can I use roughly that same strategy on the dollar? Sell on rallies. What's the view on the dollar?
Yeah, look, I think we've got dollar yen trading at the bottom end of its recent range at the moment. I think there's a pretty good chance that it goes through there. I mean, we don't exactly like the yen in any kind of major sort of tactical fundamental capacity, but it does feel like the yen is finding a bit of its mojo again, and we're seeing some flows playing through there. But I feel like the dollar's probably got a little bit of US downside, specifically against the yen in this situation. Against the Antipodeans, looks pretty. We're pretty unsure about this situation. But I think, we've seen a bit of a bull steepening coming through in the curve. If you have a look at terminal pricing of Fed funds or Fed, we've pushed up to about 3.12 recently, and that's come back to about 3%. So that terminal rate's bang on where the Fed are seeing things, and that's taken things down. We've seen 2-year real rates pushing a little bit lower. So it does feel like, the US dollar's got modest downside on a select basis. It's not going to be broad-based. But as long as volatility stays low, you can be looking at probably a little bit further downside. I like dollar yen a little bit lower in the short term here.
We were just talking to our colleague about the survey among strategists out there. They might think that Asia markets actually outperform the U.S. as we get closer to year end. Do you subscribe to that view? I mean, let's take a look at this AI sort of trade in Asia, and it's really kind of caught wind once again. And are we just kind of in the early innings of this whole AI investment cycle in China, for example?
Well, it feels like, I think, obviously it's in an earlier throes than what we're seeing in the US side of things. I mean, what we're seeing in terms of concentration risk in US AI is still very real. People have fully subscribed to that one. But I mean, you've got the Hang Seng and the Alibabas and Tencent's absolutely flying at the moment. They look, Tencent needs a bit of work, but Alibaba's been doing very nicely, and that's been a really strong trade. There's probably a place for both, because it's not like I dislike US AI. I still think there's a really nice place in that, but it has become pretty frothy. I mean, we've seen that with Oracle's corporate bond release recently. but there is real momentum coming through in that space as we go into earnings season in the US. So I wouldn't necessarily feel like it's one or the other. I think both are probably going to continue finding buyers in any kind of pullbacks. And really, you know, it's conditional on a lot of stuff that we're seeing in the markets right now, whether you're looking at gold, you know, the high beta equity side of things, the quality high beta equities, China versus or Hong Kong versus the US. You know, I think you're really at the mercy of positioning and things being overly subscribed, whether vol dynamic funds, vol targeting funds, CTAs, they're max long. And I think positioning is probably the biggest risk to a lot of these well-subscribed trades. But, yeah, do I think one was going to outperform the other? Perhaps. But I think both are going to continue working into year end.
I mean, yeah, to your point, they could all be going up.
Yeah.
So we're looking for something that could disturb the peace. To your point, you know, we're looking at crowded trades left and right. Geopolitics doesn't seem to be the thing. U.S. shutdown doesn't seem to be putting the evil back into this market. What are some of the known unknowns that you think are not getting priced properly as far as, you know, known tail risks are concerned, if any, Chris?
Well, I mean, this is the thing we've been talking to a few clients about is you need a catalyst that could cause it, but the setup is there, right? So you've got, as I say, vol dynamic funds now are increasing leverage. You know, they've been pushing up. They've been buying about $2 billion worth of US equities a day, but they're getting into quite high leverage. CTAs, max long. You know, retail are all in on this market. If you have a look at retail trader favourite baskets, you know, volatility is very low. Both on a realised and an implied basis, correlations at rock bottom levels. So you've got this great setup with the market very much short volatility, that if we do get something, it could permutate into something that could be quite a significant event. I mean, this is what we saw in February into March, where everyone was short volatility, bang, and it caused the speed and magnitude of the falls are much greater. What is that catalyst going to be? I mean, I think the biggest risk to markets longer term would be that would cause a 20% if we start repricing recession risk. But we're not seeing that at the moment. The US Q3 growth is still very strong, over 3% on the nowcast models, and the Fed are going to cut in October and maybe in December. It's still a Goldilocks backdrop with that Fed put in place. And, you know, for me, that's why I still continue to be buying dips, and I think we've got higher levels in risk assets. But,
yeah, I think,
you know, to me as a trader, what the thing that comes out when it does hit, the most important thing is we assess what that cause is, but we also know that the backdrop could be a tinderbox ready to go, given with so much short volatility and so much long positions. It won't be a one-day affair. That's the most important thing for me.
Okay, Chris, thank you. Chris Weston there, head of research at Pepperstone Group. We got plenty more ahead. This is Bloomberg.
Houses have specific strengths, along with some of these Korean corporations. How do you think they can leverage on this as they build out this ecosystem, Kenji?
Within Japan and Korea? Or...
As they look to collaborate together, and they're looking at, say, the Japanese trading houses, how do they perhaps, you know, work on that?
I can take a stab at this. I think, you know, everybody, I think, would acknowledge the fact that the trading houses have tremendous reach. In fact, I sometimes complain to Kenji-san because they take all the deals and then Korea gets the leftovers sometimes. So we found a way to collaborate on this. So I think, you know, access to technology, whether it's AI or deep tech, the trading houses have a better sense and reach to those type of companies or venture capital funds. They can screen that and bring this to the Asian market, South Korea, Japan. And we can, of course, provide, of course, I mean, Mitsubishi Heavy, Toshiba, Hitachi, these are all great companies, but South Korean companies, I think, in a way, we might be a little bit more modern or up to date because we're younger. And we can bring some of that to the table in collaborating and finding ways to localize some of this technology, both in South Korea and Japan. Very similar economies, manufacturing based, but of course we compete directly on some industries. But when it comes to coupling our two economies and localizing technology that's been derived or developed overseas in the West, then I think that's a sort of a way the trading companies can work together with our manufacturing companies.
Yeah, maybe just chime in a bit about the localization. I think in the age of AI, I think the localization is also not what it used to be largely understood is changing the requirements.
All right, so if it wasn't obvious, the theme of the panel is demystifying Korea and Japan, parallel paths and practical partnerships. So my head initially goes to demystify that name. And maybe, of course, April will dig deeper into really what that means and really how is that actionable as far as that's concerned. That is, of course, taking place at the Milken Institute Asia Summit, where our colleague, of course, April Hong, is on stage there, moderating this panel on those two big markets.
In terms of market movers, we're watching the pharma stocks in particular, and they're the first to kind of react now to that Pfizer deal, which we talked about yesterday, right? On how can they avoid sky-high tariffs, really, and still operate. And certainly that's helping a lot of the biotech space, because maybe this is a framework of how these Chinese pharma companies can expand into the U.S. as well. So there you go, 3% gains for CSPC Pharma here. Nike Suppliers is reacting, of course, to the earnings that came out a few days ago. So these are the ones in Asia, all doing quite well, given that we did see the sales there top estimates, although China was a bit of a wild card there as well. But yes, we are continuing to see risk assets doing quite well across the region here today. Plenty more ahead. This is Bloomberg. All right, 11:29 a.m. in Tokyo. Japanese markets heading to that lunch break in just a moment, and we're seeing a very kind of two stories of a tale of two stories when it comes to the stock market, right? So Topix is heading lower by 0.7%. Nikkei, though, is doing okay. I believe the chip sector might be a factor in really kind of driving some of the gains there today. 147 for dollar yen this morning, Dave.
Looking at the banks, too, that was really the outperformer, I think, when you looked at what happened, I think, yesterday. Japanese banks, that's really pulling down, I think, the Topix index as far as that index is concerned. It might explain, of course, the divergence between the two there. Asia, on a sector basis, U.S. futures coming up on your screens. You had very big tailwinds coming through out of Micron, AI, and then you had South Korea, the story across SK Hynix, and the chip story there. Then Taiwan, the TSMC story. It's a separate but similar one. And, of course, Alibaba going into today is leading to 1% gains on the benchmark today. Top row, leftmost side, a 3% pop in IT names today is really all you need for the benchmark to do exactly what it's doing on your screens. Right, speaking of benchmarks, you have the Kospi coming up on your screens very, very shortly. Within that space, you have basically the two heavyweights there doing this to that market. Singapore, 1.2. Jakarta coming online this hour. And as you can see, similar theme to what we've seen recently is the Philippines can't seem to catch a break here, bucking the trend of an overall up arrow story across the region. It's worth noting it was up yesterday. As you can see, a bit of weakness coming through given the overall strength we are seeing elsewhere. Okay, it's certainly a market we've been focused on given the political stories there with the corruption scandals, flood control measures. We'll get to all of that in a moment, what that means for the outlook for the country. But the recent decline in stocks, and I think we're down over 20% from the recent peak. This is the gauge in dollar terms. And the declines we've seen, and this is set to a quarterly setting on the chart itself, dollar and quarterly on PCOM takes you back effectively about a decade and a half. So that's how far up we've gone and how far back we've come, all the way to about 6,000 on the benchmark itself. How does that compare to other benchmarks in the region? So we put in the Jakarta Composite we talked about, that Straits Times Index we showed you earlier on. And as you can see, these are, as to borrow Yvonne's concept earlier on, a tale of two market stories. One in the Philippines, the other is the rest of the Asia Pacific. The worst performing market in the Asia Pacific this year.
Yeah, let's take a step back on why. and what's really dragging things, right? It really follows the scandal in the government's flood control projects that triggered mass protests last month. Now, it's also threatening the outlook for the nation's credit ratings and prompting growth forecast downgrades. Let's get more now from Bloomberg's Neil Morales in Manila. Neil, good to have you. So tell us more about the scandal itself over these flood mitigation projects, and why does it matter for the economy?
Yes, good morning from Manila. So this scandal brings political and economic risks. On the political side, it has already resulted in the House Speaker and the Senate President being replaced. And on the economic side, there could be a fallout, meaning economists are seeing that it could result in lower government spending, which accounts for a fifth of output of the Philippines, which is the second fastest growing in the region. Also, with tighter scrutiny on projects, the real projects, the projects that are in the pipeline could get delays, hence some impact on job creation, on government spending, and on the broader economy as a whole.
Okay, Neil, let's talk about the market. So clearly, more than one factor is suspect here as far as why the market is coming under pressure. If you could just list the factors involved here and why we are seeing the markets come under pressure, and is there light at the end of this current tunnel?
Indeed. The Philippine stock market is like an unloved dish in the regional and global menu so far. So despite sweeteners like the Philippines operating as the second fastest growing in Southeast Asia, companies reporting top line, bottom line double-digit growth, and sweeteners like dividends to stockholders, investor sentiment has turned sour in this part of the globe because of uncertainties, because of risks both domestically and externally. Domestically, we have mentioned that this scandal has eroded investor confidence in the Philippines, particularly foreign investors. We've seen lots of foreign selling in the past days. And also, on the external side, we see that the peso is depreciating, showing foreign exchange risks to foreign investors, not to mention uncertainties emanating from the U.S. And also, recent string of typhoons here in the Philippines have stoked concerns that inflation might go higher again, affecting the consumption of the Philippines.
Okay, tell me, are there any silver linings in all this, Neil? Or are you telling me that we should just brace for more headwinds?
Yes, indeed. So analysts and bankers are on a wait-and-see mode for now, standing by for further catalysts like central bank rate cuts and also signs of improved consumer spending. So the they say that the Philippines is now operating at a bargain, cheap prices, offering great returns for those with patient money. So essentially, a waiting game for now, a waiting game for positive leads and less risks or appetite dampeners in the market.
Neil, thank you so much. Oh, a lot of food analogies there. Thanks. Making me hungry. Unloved dish in this current cuisine list. Taking through. Neil, thank you so much. Neil Jerome Morales there in Manila. For us at some point, of course, tides turn and tastes evolve, and at some point we'll see, of course, hopefully, money come back in. It's also worth pointing out, right? So we'll talk about this story in a moment. There are some silver linings here as far as the bond market is concerned. The market, equity market specifically, is trading in single digits, so that's perhaps one enticing appetizer that could lure people back in. The other, of course, as we talk about pressure on the economy and markets, sovereign debt actually could be a bright spot thanks to rising foreign demand. You have lower government borrowings, or supply-demand dynamics effectively are in favor of the bond markets there. The Treasury Bureau says foreign holdings more than tripled to 6% as of August, if you measure that back from 2021, with inflows set to continue as supply drops. Now, Philippine bonds did come under pressure in the third quarter, just to mention that, to trailing all Southeast Asian peers, and it's unsurprising. Why is it too early to be talking about sovereign ratings at this point, given the fiscal issues there in the country, or do we need to wait for more catalysts as far as that's concerned? Plenty more ahead. This is Bloomberg.
stories making headlines around the world this morning. Rescue efforts continue in the central Philippines after an earthquake that killed at least 69 people and injured around 150 others. The 6.9 magnitude quake struck late on Tuesday, and officials say many victims were killed in their homes or hit by fallen debris. It's the country's deadliest quake since 2013. The U.S. will reportedly provide Ukraine with intelligence for long-range missile strikes on Russia's energy infrastructure. The Wall Street Journal cites unnamed U.S. officials saying the Trump administration is also weighing sending Kyiv powerful weapons that could put more targets within Russia in range. The report also says U.S. officials are asking NATO allies to provide similar support. The White House budget director is said to be planning to swiftly dismiss federal workers amid the U.S. government shutdown. Sources say House lawmakers have been told that some agencies will terminate workers within 1 or 2 days, although it's unclear which positions or agencies would be affected. It's a sign that Republicans will employ hardball tactics to pressure Democrats to cave and end the shutdown.
Right, let's head back to our coverage of Asia's flagship digital asset conference. That's Token 2049, taking place in Singapore, and our colleague and Insight anchor Haseeb Amin is standing by with her next guest. Haz.
Hey Dave, what a ride it's been for cryptocurrencies. We had that recent sell-off wiping out $300 billion. But you know what? Bitcoin still about 112,000. Let's get perspective on where we are with cryptocurrencies. Haseeb Qureshi, managing partner at crypto investment firm Dragonfly. Haseeb, good to have you with us.
Thanks for having me.
So this recent sell-off, is it a reflection of that momentum easing somewhat?
I mean, look, crypto always has ups and downs. I think you want to zoom out a little bit and look at the overall trend line. Very, very clear. There was a little bit of leverage that got flushed out of the system. But today, you see assets are up. I don't think animal spirits have really died down. There's no sense that this is over or that this is even taking much of a breather. I think the reality is that every leg up on crypto always has these little breaks along the way for everyone to catch their breath, reload, and see what's coming next.
What's driving their optimism?
That optimism is just that, I mean, look, all the stuff going on around the world, whether it's financial institutions adopting crypto, whether it's the regulatory environment completely changing just in the last 6 to 12 months, or if it's the rapid adoption of stablecoins all over the world, like every single metric you care about in crypto is going up and to the right. So I don't think there's any sense from this market that, hey, we're over and done and dusted. I think everybody expects that the market opportunity for crypto is only getting bigger.
And of course, when it comes to the Genius Act, they say that that's been front and center, and that's driving optimism because we have regulations that's pretty much in line with the sector.
That's right, that's right. I mean, this is the most, well, first of all, it's the only legislation that has ever passed in the US in the 15 years since Bitcoin was created. This is the first bill ever. And of course, it enshrines stablecoins into the law, which now, I mean, most people realize that the US is very much a leader on regulation. A lot of other countries that have been kind of waiting and seeing on what they want to do about stablecoins, seeing the US embracing it tells them, oh, hey, we should also adopt our own stablecoin legislation. So I was in Japan just a few weeks ago. I was in Korea last week. All of them have bills in Congress right now about stablecoins that they also expect are going to get passed, given what's happened with Genius. So this is all happening all around the world simultaneously. And the growth rate in stablecoins themselves has been astronomical. So we started, beginning of last year, there was $140 billion in stablecoins. We're about to hit $300 billion. Right? And Secretary Weston has said he expects stablecoins to hit $2.7 trillion by the end of the decade. If that's true, that's a 70% year-over-year growth rate from now until the next 4 years. That basically means that...
He also said the stablecoins will be gobbling up treasuries, but you know, it remains to be seen whether that happens or not. All this optimism, I'm just wondering, is it trickling down in terms of, you know, the funding environment? What are you seeing?
Absolutely it is. So you can see very clear, especially on the stablecoin side, there's a massive build-out happening right now. There's over 15 of the Fortune 100 companies have live RFPs for people to help them with treasury management through stablecoins. Right? We're now seeing crazy growth rates on the ground. We recently made an investment into a company called Rain, which is a stablecoin card company. They allow you to pay in traditional, you know, if you go to a mall and you want to buy something with stablecoins, most places in the world that's difficult today. Merchants don't yet take stablecoins. But if you can go through the card networks, if you can go through Visa or MasterCard, but have stablecoins settling on the back end, you can have lower fees, real-time settlement, and anybody with stablecoins can suddenly pay for anything all around the world. These companies, so Rain, for example, is growing 20-25% month over month, okay? It's an insane growth rate. But you're seeing the build out happening right now for stablecoins, because everybody is seeing down the road all of these banks, all of these companies are now figuring out their stablecoin strategies because they know this is coming. It's not a future story, it's a right now story.
It's a right now story, and what's happening right now too is this craze of the DATs, digital asset treasuries. It is a craze, isn't it? It's going to stop somehow. This consolidation happening already.
That's right. It's already stabilizing, right? So actually, just this morning, we announced that we invested into a company called the Avalanche Treasury Company, which is accumulating AVAX, which is one of our portfolio company investments. We also invested in another DAT for Athena, which is another one of our portfolio companies, which is a decentralized stablecoin. Now, more and more of these are launching, but we're seeing consolidation on a per asset basis. Now, what do I mean by that? Right now, if you look at MicroStrategy and BitMine, which is the big Ethereum one, those comprise already 88% of the trading volume of all of the DATs, right? Just those two, which tells you there's consolidation and there's not going to be room for multiple ones for a particular asset. It's going to be the winner gets all the gains, and you can have one for each asset as an access play to allow investors who don't necessarily want to go and buy spot of the underlying on Coinbase or Binance or whatever, they can buy directly through the stock market in this interim solution before you have an ETF for the underlying asset. So I think these DATs make sense as an overall asset, and they can do things that an ETF can't do. They can do staking, they can do capital accumulation, as well as go get involved directly into the ecosystem to do value accruing plays.
Interim, right? At some point, it's all going to stop.
Well, no, it's not that it's all going to stop. I think what's going to happen is that the NAVs, the MNAVs, the multiples to NAV, they're going to go to 1 or 1.1, something very stable, and it's not going to be, oh, these things are trading at 2x, 3x NAVs. I think people have already seen that happen, right? So MicroStrategy Premium was at like 2x, just 6 to 9 months ago. Now it's come down to like 1.4, 1.5. Everything else is basically at 1. And I think that's normal. That's what you should expect in a stable market, is that, yeah, there's not a crazy premium arbitrage. The story is more around how can they create value that's going to be accruing to the underlying, not at like a 50% premium, but more closer to like within, call it 10, 15%.
So consolidation is happening. Do you expect further consolidation, and who might the winners be? Is it a case of the big boys will win for sure?
I think that's true on a per asset basis. Definitely it's going to be the case that you see M&A happen. So right now, there's way too many of these vehicles, and if some of them are trading at discounts to NAV, then the economically rational outcome is that the big guy who's trading at a premium to NAV or trading at par goes and acquires the vehicles that are trading at discounts. And by coagulating them into a single big vehicle, all of a sudden those discounts can get erased, right? So we're definitely going to see that. It doesn't really make sense to have like 10 teams and all of them have their own management team, their own filings and regulatory obligations. It should be that there's consolidation in the market. It's too early to see that yet, but I suspect over the next 6 to 12 months, we will see that.
Where are you deploying capital right now?
So a lot of our money goes into early stage investments. So like seed, Series A. We're investing a lot in the stablecoin space. We also invest a lot into infrastructure. DeFi continues to be a big part of our investment thesis, and you're seeing a lot of growth in DeFi this year. Big story around Hyperliquid, which is a large perpetual swap exchange that's purely on-chain, and we've seen a bevy of new products that are going live, playing for this decentralized marketplace. Now, DeFi, you've seen grow to something like 15% of the centralized exchanges volumes is now purely in DeFi. That's a really big story. Before it was close to like 1 to 2%. So I expect that number to continue to grow, and that's another area we spend a lot of time on at Dragonfly.
Are you excited about what's being offered here in Asia?
Asia is a big part of the story. So Hyperliquid themselves, their team is here in Asia. So same thing with Aster, which is right now the #1 DeFi exchange by trading volume. Asia's always been a big part of the story in crypto, not just in terms of builders, but especially in terms of adoption. The go-to-market, and of course the biggest exchanges in the world, they're all here in Asia. So Asia's a big part of the story. That's why we spend a lot of our time on the ground here in Asia as well.
Where do we go from here? Because we have the likes of I guess that is it. I've just gotten my instruction to wrap it up. Thank you so much for joining us. Haseeb Qureshi, managing partner at crypto investment firm Dragonfly. Of course, we have a lot more coming up here from Token 2049. Yvonne, we will continue this conversation.
Yeah, you got a great lineup coming up. Haz there joining us live from Token 2049. As we mentioned, we'll have more in the next hour. Haz will be speaking with executives from the likes of Robinhood, Ethereum, and Circle, all the big guys there. Plenty more ahead. This is Bloomberg. All right, time now for a look at stories that are making headlines in China's domestic media. We're talking about Golden Week, right? That's the key focus with news outlets reporting, get this, 23 million passenger trips estimated on the first day of the travel rush. Let's get to our China correspondent, Min Lo. She's tracking all things Golden Week, traffic, spending patterns, what have you. Give us a flavor of what these preliminary numbers tell us.
Yes, Chinese state media has really been highlighting some of the better performing sectors of the economy. So they're highlighting the Yangtze River Delta, which is Shanghai and some of the eastern provinces that are the economic powerhouses of China. And they're talking about rail travel up about 10% on year. And Shanghai in particular expected to have already hit a single day record on October 1st when it comes to rail travel. But overall, nationally, we're looking at cross-regional trips up about 1.7%. So not as high as the Yangtze River Delta, but still very solid numbers there. One area that is not doing so well is the box office data. Based on day one of the numbers, we're looking at 300 million yuan on October 1st. It sounds like a lot, but you compare it to last year, it is 1/3 below last year's numbers, and it's less than half of what it was back in 2019 before COVID. There you go.
Let's look at social media. There's always some interesting insights there.
Yes, the latest phenomenon is chicken cutlet bro.
Okay.
He is
chicken cutlet bro.
Yes. He's
Okay.
based in a small town called Jingdezhen, which is the porcelain capital of China.
That's amazing.
I love him.
Yeah.
Jipai
So this place has been making porcelain for thousands of years, but now people are going for the chicken cutlets, and you can see it's like a performative sport. He's going, I'm going to make one for you, I'm going to make one for you, I'm going to make one for you, and that whole clip, he's talking really fast and juggling a lot of things. That clip became a meme where people would replace the customers at the back with all the people they have to deal with in their daily lives, from their wives and their husbands to their clients to their bosses. So it became this meme that really, got this guy famous a few days ago, and now people are flocking to this city, Jingdezhen, to eat his chicken cutlet. And it's really interesting because the local government then paved the road leading to this place, and that became the hashtag on Chinese social media. It
Good on
says,
them.
I love
the
it.
chicken cutlet road gets paved before National Day. That's a hashtag on Weibo. And we can show some of the interesting comments that we're seeing. Some people are saying, wow, it only takes half a day to pave the road. In my hometown, it takes 10 years. And some others are saying that this guy, he is single-handedly raising the GDP of the chicken cutlet road.
Yeah.
And it's interesting, it's a heartwarming story because there are a lot of locals who are so enthusiastic about the visitors coming. They brought chairs, like hundreds of these red stools, give it out to visitors to sit on while they queue for that chicken cutlet.
I mean, he's a hustler, you could tell, right?
Yeah.
I don't even think that's a fast forward
That's the
video.
volunteer with a stack of stools.
Oh my goodness.
Do we know if the food is any good?
It must be.
Well,
Right?
people are queuing hours to get his
There we
chicken
go.
cutlet.
Okay, that's-
But there is a guy who commented and said, this guy is so skinny, he's going to be as skinny as his chicken cutlets, like at the rate that this goes.
I was gonna say, I mean, how does he get a break? Does he get a lunch break? It looks like he's just constantly frying up those things. I love it. I love this story. And they're talking about how he's like an example, right, of a hustler, right? Don't lie flat. Don't, involute.
Yes.
He's a good example.
And I'm hungry.
I love it.
What are
Chicken
we getting
cutlet
for
bro.
lunch?
I love him.
Something for the fake fitness influencers to follow. People who are faking high rocks and posting your pictures. Follow that. Look at him. Look at him, right? So you can enjoy your meal and also be fit and active and
work hard, play hard, man.
Clock your steps.
Chicken cutlets, the fried chicken cutlets, not that healthy.
I
actually.
need that now.
It's okay.
Okay.
Sometimes you got to balance your life a little bit, right? Enjoy a little bit. Min, thank you. Min Lo, our China correspondent.
We're going to get this for, I know what we're going to get for lunch. I know exactly.
During China consumption, or
Okay.
Golden Week, I should say. All right, benchmarks are doing this. Hang Seng continues to see. It is an up arrow story. We're close to 400 points to the upside here right now. It was interesting, right? We were talking to Laura Wang from Morgan Stanley earlier about if you want to get returns, what's going to be the key driver? And they say it has to be earnings growth, right? And for the first time, I think maybe in a few quarters, I think since late 2024, she said, you're starting to see those positive revisions, right? Particularly in the tech sector. So that's why they say focus on these mega cap sort of tech stocks there. You're starting to see that ROI really when it comes to some of these plays.
Yeah, the ratio of the upgrades to downgrades has finally turned positive in the last few months or so, making China the second market currently behind the U.S. that has had that. So earnings are coming, and maybe to justify part of the rally here, do not get too concerned over this divergence between the market and the economy, because earnings have started to broaden out and have really started to stabilize and also turn. AI is in play, semiconductors in focus, also casinos. We talked about Golden Week doing this. Plenty more ahead here on Bloomberg Television. For us, we will see you all tomorrow.